Hello and welcome everyone. It's a pleasure to be with you this week for this recap for the week ending January 22nd, 2025. So this goes from last Thursday's open through Wednesday's close. Wanted to give you a quick update what I'm seeing in the market. So we'll talk about some of the major indices, some sectors, talk a little bit about seasonality, some individual stocks that maybe we want to keep an eye on, and along with some breakouts of key industry groups and so forth. Couple things that I want to remind you before we get in, start taking a look at some of the action over the last week. First of all, from a seasonality perspective, the most bullish period of the year has ended. So I always talk about the end of October from the close on October 27th through the close on January 18th as being the most bullish period of the year. It's not my opinion, it's actual fact. This dates back to dates back through history to 1950 on the S&P 500, where that period, October 27th at the close to January 18th at the close, that period has closed higher than it began 63 of the last 74 years. Well, we just did it again. So now it's 64 of the last 75 years. So it's a pattern that continues to work. Something to be aware of as we move into the fourth quarter, at least into the first few weeks of the fourth quarter, and that carries over into the start of a new year. But now we're on our own, I guess. We don't have those historical tailwinds behind us, so it doesn't mean market's going to go down. It just means that we're no longer in what has been the best period of the year historically. On Tuesday, President Trump announced that the private sector would be funding up to $500 billion of investment to fund infrastructure in artificial intelligence. Now, ChatGPT's creator OpenAI, SoftBank, and Oracle will combine to form a joint venture called Stargate, and Stargate will be building data centers and hopefully creating more than 100,000 jobs across the U.S. So I think what this has done is kind of bring AI back into the limelight. We saw technology starting to move here again this week. Some key areas of technology have broken out. We'll take a look at one key area and a chart on that a little bit later in the show. But what this tells me is that we're getting a lot of money rotating right now back into key aggressive areas of the market like technology. And if that continues, that could be something that certainly would help the stock market going forward, because technology represents about 32.5% of the S&P 500. So with all that in mind, let's take a look at what happened last week. NASDAQ 100, you can see up 2.9% for the week. The mid caps up 2.39, the S&P 2.29, Dow Jones 2.16, Russell 2000 1.9, and then lagging over the past week has been transportation, which has risen 0.7% over the last 5 or 4 trading days, because we did have a holiday on Monday. But looking at this, it kind of flipped a little bit from what we saw last week. Last week, I think we were talking about mid caps, small caps, transports leading to the upside. We still have mid caps up there, but for the most part, it was actually this resurgence in technology which drove the NASDAQ 100 back to the top of the leaderboard. Moving on to the sectors, you can see technology over the last week gaining 3.92%. And over this past week, 10 of the 11 sectors are higher. So again, wide participation as the S&P 500, I'll show you in a minute, S&P 500 back near all-time highs. We're seeing that money rotate amongst many different sectors, but it's really good to see it moving back into some of the key aggressive areas like technology, which is first for the last week, communication services, which is fourth on the list, industrials, which is second on the list. So some of those aggressive areas are getting some of that money, helping to drive the market higher. And I think that's a good signal as we move forward. To the bottom of the list, you can see energy, healthcare, and the consumer stocks. They tended to perform a little bit weaker over the course of the last week. But overall, all of these groups tend to be very bullish. All right, so let's take a look at the 10-year Treasury yield. So the 10-year Treasury yield, which had been a problem for the market because we had seen it going up. I mean, we went from early December from about 4.13% all the way up to over 4.8%. And that was getting close to the recent high from last year, not this past 52 weeks, but prior to that, where we had gotten up to 5% on the 10-year Treasury yield. So that was really hurting a number of areas, including home construction. Home construction had been, languishing as 10-year Treasury yield's been moving up because mortgage rates have been going up as a result, and that's kind of kept the lid, not only a lid, but sent the home construction group to a 52-week low to challenge some earlier lows from within the past year. Anyhow, over the last week, we've seen that 10-year Treasury yield come down. So it started with the December PPI and CPI, which both came in below expectations. PPI was actually flat at the core level and just continued moving down off of that. It seems like the market now is saying, oh, well, we're not going to worry about inflation right now. And so we've kind of seen that trade reverse. And with rates coming back down, we saw we saw the mortgage rates coming down, but we saw the home construction group turning back to the upside, which was one area that was pretty nice. Let me just show you that chart real quick before we move on. But here you can see with the rates that were coming down over the last week, look at the jump here in this chart of the home construction. So we're getting this move back up. Volume was pretty strong. We got back through the 20-day. Do we hold the 20-day or do we move back down? If we move back down, do we hold this support area just below 2,300? Because looking back, that's been a very, very important level on this level or on this chart. So that's something we need to watch for in the week ahead and into next week. Do the Treasury yields continue to move lower? Does that keep the mortgage rates coming down? And do we see the home construction stocks continuing to move to the upside, maybe trending back up above that 20-day moving average? That'll be an interesting story to watch. Moving on to the major indices, we got the S&P 500 getting back up to about that 6,100 level. Those were the highs we saw, the all-time highs that we saw back in the first and second week of December through the middle of the month. Second half of December, which typically is pretty bullish, was not this past year. That's where we pulled back all the way into the second week of January. And now very quickly off of these inflation reports, these tame inflation reports from last week, we've seen the market rebound and get all the way back up to those highs. So far, I like what I'm seeing. Of course, we'd like to get that breakout extended advance. Let's get through the 6,100 level. Again, something to watch in the week ahead. The NASDAQ 100, not quite as strong as the S&P 500, but definitely picking up here the past few days. And the technology group really only looking at one key level, and that was the high in mid-December, just above 22,000. So if we can get the NDX moving up, getting through that 22,000 level, supported by a breakout in the technology group, that would be something to help the market move as we look forward. IWM, small caps, not doing as well as some of the their larger counterparts. But again, since that inflation reports came out last week, we're definitely seeing better performance in small caps. We did get through a key pivot level or pivot area right around 225 to 227. If you go back and look over the last 6 months, we have had some trouble getting through about 227. Then when we finally did, notice when we came back down, we held that area. That was probably about 226 on the low, failed to break out. Then we went through 225 to the downside. Where did we fail coming back up? 225, 226. And then finally, this week, we've made the move back up to the 230 level. And we're kind of in this range now. Support 225 to 227. I think the key short-term resistance is right around 230. That was the recent price high and also the 50-day moving average. So kind of trapped on the IWM. I'd like to see this breakout above 230 here. Transports, mentioned it was the weakest area this past week. We did fail at the 50-day moving average. If you look back, 16,750 was where we topped back in October, where it looked like we were getting a breakout and then pulled back. So I would say this 16,750 area is another key pivot area to watch on the transportation group. And notice the 50-day moving average right now, 16,712. So if we can get through 16,750, we're getting through key areas of price support and the moving average as well. Again, one more thing to look for as we move forward. It would be very helpful and bullish to get breakouts on both transports and the IWM. Moving on to the sectors, I wanted to point out and talk specifically about technology today because this was the highest close we've ever seen on the XLK. We closed today at 241.39. And if we use this little inspector button, we can go back here and look at these prior highs. 240.74 on December 4th, 241.04. That was December 16th. 240.69. That was on December 26th. And today, 241.39. So we actually closed at our highest level. Volume was picking up on the session within that technology area. So I thought that confirmed this breakout. We've been waiting for it. We've been going sideways. We finally got it. And as I mentioned earlier in the show, technology is 32.5% of the S&P 500. So when you start getting breakouts in key areas like technology, it means a lot more than when you start seeing breakouts in, say, something like energy or utilities or real estate or something like that, where you have much, much smaller percentage or representation in the S&P 500. So that's a big deal watching the XLK break out today. Looking within the XLK, this is the electronic equipment group. So the Dow Jones U.S. Electronic Equipment Index, and this was breaking out, looked really strong yesterday in terms of moving up close to resistance. And then today on Wednesday, January 22nd, we actually made this breakout, which I think is a big deal. Look at the volume picking up. Notice that this strength began back in the middle of summer. That was when we started getting our first clues about the Fed funds rate coming down. And we now have the longer end of the yield curve still sitting up. This is uninverted the yield curve. So we're getting a lot of banks that are benefiting from that. And I think a stronger banking group with deregulation hitting and so forth. As we move forward, I think this combination is going to benefit a lot of areas of the market. But you can see one right here on your screen, electronic equipment making a big breakout. Couple other areas in the technology group I just wanted to point out. Here is the computer hardware. We've been watching Apple struggle of late. So this is a part of the technology area that is not performing well. A lot of times when we see the XLK breaking out, it's because of Apple and it's because of Microsoft. It's because of computer hardware and computer software, in addition to semiconductors. Well, we're not getting any help right now from computer hardware and from Apple. And we're able to make a breakout without that particular stock, which I think just adds to the bullishness underneath the surface of what's taking place in technology. Another group I wanted to mention, here's the software. We are bouncing back nicely here over the last 5 or 6 days in software, looking to build on some relative strength that we've started to create as well. This would be a big breakout if we could get software to break out above this recent relative high, about 128, maybe just a little above 1.28 here. That would be nice. And then finally, one other group I wanted to mention, semiconductors. NVIDIA had a big day today. A lot of other semiconductors performed well. The semiconductor equipment manufacturers, Applied Materials, KLA Corp, Lam Research, all of these stocks have been really surging over the past week or two. And so all of this is setting up potentially for a breakout on semiconductors. If we get that, that just adds to this technology breakout that we're seeing. Now, I am looking down here at the bottom, semiconductors relative to the S&P 500. We have been slowly improving on this relative strength since back at the beginning of September, but we haven't gotten back to the highs that we saw last June. So that's going to be the challenge for the semiconductors, is getting back up, not only breaking out on an absolute basis, but seeing that rotation that enables semiconductors to break out on a relative basis as well. I'm going to get back. I want to look at some of those electronic equipment stocks. Let me bring that chart up again just to remind you. We're going to take a look at some stocks within this group in just a few minutes, but wanted to point out again that breakout there. All right. At Earnings Beats, we do a lot of things for our members, obviously, but we also have a free community that we like to give back to the community. One of the things that we're offering right now is this Boley Trend Market History. So when I talked earlier about the fact that the strongest period of the year is October 27th close through January 18th close, there's a lot of facts in this free report that you can download to learn more about the history of the stock market. I guarantee you it will help you in your trading. There's no cost for this. It's literally an email. So if you click on this, it will bring up a page where you can sign up with your name, email address, and you can download the report. If you can't answer some of these basic questions that we ask here, then you should definitely enter your name, email address, and get this information. So make sure you check that out. In the description today of this video, you'll be able to click a link to take you over to this page as well. So make sure you sign up. That's going to be really important. Speaking of seasonality, I want to talk to you a little bit about one of the things we offer our members. We do a seasonality chart list. So let me just pull this up for you. And the seasonality chart list, we do it every month. And so this was January's. And oh, that's a short squeeze, went the wrong place. Hold on, here we go. I'm gonna bring this up and view the entire chart list in summary form. And so what we do, and this is a really cool feature at Stockcharts. If you're a member at Stockcharts, you probably know this. Maybe you know this, maybe you don't. But for those of you that are free subscribers over at Stockcharts and you don't have a paid service, the chart, you're really missing out a lot on the chart list feature. This is something that really my entire service at earningsbeats, our whole team, and a lot of our products are built around this chart list feature. But here's a seasonality chart list that we send to our members every month. And so at the beginning of January, we send this out. And what we do, we number it 001 through 020. So the top 20 stocks to be aware of in terms of seasonal performance during the month of January. These are all stocks that have a history of performing really well. And so if you look at the name of Netflix, Netflix is the number one performer. And of course, we just had earnings, big gap up today with earnings, sold off after that a little bit, but we're up again in the month of January, like we usually are. Netflix goes up over the past 20 years. It's gone up 70% of its Januaries. So only 30% of January's has it gone down. So it's just giving you a little bit of knowledge that maybe a lot of folks aren't aware of to help in your trading. And then this next percentage, 15%, that's the average return in Netflix over the last 20 years during the month of January. That's a big number. And then the other thing we do for our members is we just throw in here the date of the earnings report. So 121 after the market close, AMC, or BMOs before the market opens. But that 121 AMC, Netflix reported yesterday. So any of our members that pull these, pull the seasonality chart list up can look to see when earnings are coming up, because that could be a factor in whether or not you want to own a stock. You got to be willing to take that risk to hold it into an earnings report. So anyway, it's sorted by name, but there are a lot of other things you can do with this as well. You can take a look at it by percentage, and I'm going to go back and show you what's going on so far, month to date. Micron's up almost 30% during the month of January so far. That's one of the stocks we put out there for our members to at least be aware of. That's a pretty big move, certainly way ahead of the S&P 500 for the month of January. And we've got, WDC, CIVI. Look at these. We got 5 that have moved up in January, more than 10%. And of the 20, only 4 are down for the month. So again, the chart list feature is pretty cool because you can set up a watch list of anything you want. This is how we basically take our research and we use the Stockcharts platform, as you can see, to be able to provide these chart lists to our members. And we encourage our members to become a member at Stockcharts as well, because then they can use all of our information, drop it right down into their Stockcharts account, and all of our research is in their account, literally like that. We probably have 20 or 25 chart lists that members can download into their own chart list, their own, excuse me, Stockcharts account. So pretty cool stuff. Just want to make sure you're aware of that. But again, the beginning of every month, we send this out to our members, top 20 stocks for that month in terms of seasonality. So that and again, they don't all work. We got 4 this month that aren't working right now. But we also got a lot that are working. So it's just, again, more information, be more knowledgeable, make better trades. All right, last thing I want to do, I mentioned that the electronic equipment index had been performing well. So there, if you go under the electronic equipment index, I'm going to show you how you get there in 1 second. But you can look at all the stocks that make up this index, and then we can go back and we can take a look and see if some of the charts make sense. So let me first show you how we get there. Let's go to your dashboard. So you just start there under Member Tools. Go down until you get to Sector Summary. That's going to be under Summary Pages. Sector Summary, click on that. Technology, this group's within technology. I click on that. Gives me all the industry groups within technology. And then here's the electronic equipment group. It was up 4% today, a little over 4%. We got the breakout. That was the chart that I showed you right here. There's the breakout, electronic equipment index. And so now what I'm doing is I am going to click on this and it will give me all the stocks within this index, or at least that are categorized under this index. So I've got it up right now as an intraday. Like Mobix Labs was up 40% today, and you can see all the different stocks within this group that were up. We can look at it in terms of market cap. So you might want to find the big companies in here, or maybe, go down here, maybe some of the mid caps interest you or small caps, whatever. Scooter, we can do it in scooter order, which is a Stockcharts technical rank. It's kind of a relative strength indicator. If we want to find out which stocks are really doing well, on a relative basis, we can do this. Here's a stock. This is only a $278 million company, but it's doing pretty well. We can then change to say, year to date. So that'd be since beginning of the year, and we've got it in scooter order. This stock's down 3% for this month, but it's a strong scooter. Maybe that's of interest. Or we can look at some of these other stocks. Anyway, you can see just from this one summary of these stocks how you can manipulate the data and find some of the stocks that you're looking for within some of these industry groups. So anyhow, that's essentially what I wanted to go over today. Really appreciate you joining me today. If you want to follow us at Earnings Beats, there's a slide where you can simply go in, scan that QR code. It'll take you over to another page where you can learn more about how you can follow us at Earnings Beats or at Stockcharts or at YouTube. All of that information will be provided for you. So that's it for this week. The next week tends to be pretty good in terms of history. We got a lot more earnings reports coming out. I mean, my goodness, Netflix, good report, Gap up. Intuitive Surgical is going to be reporting later this week. They already preliminarily reported great results. Stock's been up. One of the stocks that in our Earnings Beats Digest, which is a free newsletter, anybody can sign up, no credit card. One of the stocks we provided recently was Interactive Brokers. I really liked that stock, the way it was setting up going into earnings. Today, IBKR did report its earnings, or yesterday after the close, they reported, had a really nice steady day. Stock, I think, was up like 6-7%, maybe even a little bit more than that. But those were just some of the key earnings that we've seen so far. But a lot more companies will be reporting earnings over the next several weeks, and we'll be bringing many of them to you. So if you like today's video, please like the video and click on that subscribe button to the Stockcharts channel. That would be much appreciated. Again, it was a pleasure being with you today, and we'll be back next week. Check it all out again. Have a great rest of your week and weekend. For the football games this weekend, we're going to have a couple winners. They're going to be going on to the Super Bowl. If you're a football fan, you should have a great time on Sunday. Anyhow, that's it for me. Happy trading, everybody.